Poor families think they're safe. They think their savings account is safe. They think their pension is safe. They think their life insurance is safe. They're wrong. Every single one will fail when the dollar collapses. Safety is perception, not reality. Poor families are most vulnerable because they have no backup plans. They're entirely dependent on 12 assets they believe are protected. But these assets aren't safe. They're dangerously unsafe. The most relied upon assets fail first. Bank accounts freeze. Pensions get cut. Insurance becomes worthless. Life savings evaporate. Reality contradicts belief. The system told them these purchases represented security. The system lied. What are these 12 assets that feel safe but will collapse? And why does poor family security depend on a system that's already failing? Your savings account feels safe. It's insured. The government protects it. Except when capital controls are imposed, banks freeze accounts and your money becomes inaccessible. Savings accounts seem like the safest option. Poor families depend entirely on them. They put every dollar they can save into accounts. Insurance creates false security. The government promises deposits are protected. But insurance means nothing when the system fails. Capital controls freeze access instantly. In Cyprus 2013, deposits were frozen and haircuts imposed. In Greece 2015, ATM withdrawals were limited to €60 daily. In Argentina 2001, the Corralito froze accounts completely. In Lebanon 2019, the banking system collapsed. Banks become insolvent when governments become insolvent. Deposits become frozen when governments need money. Currency devaluation destroys value while your money sits frozen. You can't access your own savings. Banks depend on system functioning. Government controls access. Freezing prevents access to own money. Bank savings feel safe, but they depend on a system that's cracking. Asset 2 feels even safer because government promises it. You paid into your pension for decades. The government promises it's protected. But when governments become insolvent, pensions are first to be cut, reformed, or restructured into worthlessness. Poor families depend entirely on pensions. They've contributed for 30, 40, 50 years, believing the government will deliver promised payments. Government promises create false security, but pensions are government promises. When government can't pay promises, pensions disappear. Government can't service all promises simultaneously. It chooses which ones to honor. Pensions are vulnerable because elderly can't work. Benefit cuts are standard during crisis. In Argentina 2008, the pension system was partially seized and converted to government debt. In Greece 2010 to 2015, pension cuts reached 40 to 60%. In Venezuela, pension system raids occurred repeatedly. In Lebanon, pension freezes became permanent. In Germany 1923, pensions were paid in worthless currency. The promised amount stayed the same. The purchasing power collapsed to zero. The mechanism is simple but devastating. Government changes terms retroactively. Inflation erodes purchasing power while nominal payments stay frozen. Pension funds become government spending as budgets collapse. Pensions are denominated in failing currency. The elderly are trapped with insufficient income. They have no way to earn additional income. They're the most vulnerable population. Pensions feel protected by government, but government itself is insolvent. Asset 3 feels protected by insurance. Life insurance feels safe. You pay monthly premiums. The company promises to pay your family. But when currency collapses, the payout is in worthless money. Life insurance creates false security through decades of payments. Poor families believe they're protecting their children's future. Policies are denominated in failing currency. When the currency collapses, the payout becomes worthless. Insurance companies become insolvent when they can't invest safely. Annuities collapse as returns disappear with inflation. Fixed payouts become meaningless when purchasing power evaporates. Inflation destroys real value while promised amounts stay frozen. Historical examples are brutal. In Weimar Germany 1923, life insurance policies were paid out in worthless marks. A policy worth enough for a house in 1914 was paid out in 1923 in currency buying nothing. Technically honored, actually destroyed. In Argentina 2001, insurance companies failed entirely. In Venezuela, the insurance market collapsed. In Lebanon, insurance companies failed. Company insolvency prevents payout altogether. The mechanism is inescapable. Insurance companies depend on the system functioning. Currency devaluation destroys payout value while nominal amount stays same. Companies can't invest safely when markets collapse. Returns disappear with inflation. The promised amount doesn't equal purchasing power. Your family receives payment in worthless currency? Insurance promises protection. But promises are only as good as the currency they're paid in. Asset 4 seems concrete and physical. Cash feels safe. You can hold it. You can hide it. But when currency collapses, cash becomes paper. Literally worthless paper. Cash seems like the most tangible asset. It creates false security through physicality. You can touch it. You can count it. But currency collapses destroy value instantly. Money becomes worth less than the paper it's printed on. Hyperinflation makes cash useless overnight. No one wants collapsed currency. Cash holdings are wiped out completely. Historical examples are merciless. In Zimbabwe 2008, the currency was abandoned. People with stacks of cash had nothing. In Venezuela 2016 onward, currency became worthless. In Lebanon 2019 onward, currency lost 90% of value. In Argentina 2001, the peso collapsed 70%. In Weimar Germany 1923, marks became toilet paper. Currency isn't backed by anything. Government controls money supply and prints endlessly. Printing destroys value mathematically. No protection exists from currency collapse. Your entire savings can disappear in weeks. Cash is vulnerable to currency collapse. Asset 5 feels more stable because its debt-based bonds feel safe. The government promises to pay you. But governments default, restructure bonds, and destroy bondholder value. Bonds seem like a safe investment. Government backing creates false security. Poor families believe bonds are protected by the full faith and credit of the nation. But governments default on bonds when they become insolvent. Bonds are restructured to reduce value when governments can't afford to pay. Currency devaluation destroys real value while nominal payments stay frozen. Interest doesn't keep pace with inflation when central banks print money. Bonds are denominated in failing currency that loses purchasing power. Historical examples prove the pattern. In Argentina 2001, the government defaulted on bonds. Bondholders lost 50 to 70% of value. In Greece 2012, bond haircuts were imposed. In Lebanon 2019 onward, bonds became unpayable. In Russia 1998, bonds defaulted. The mechanism is inescapable. Bonds depend on government solvency. Government can't pay all obligations when insolvent. Currency devaluation destroys value while promised amount stays same. Default can be forced restructuring without bankruptcy. Interest rates can't keep pace with inflation. Restructuring imposes losses on creditors. No protection exists for bondholders. Bonds depend on government solvency. But government itself is insolvent. Asset 6 feels safer because it's a tangible good. Your home feels safe. Real estate always appreciates. Except when markets freeze, property taxes become unbearable, and you can't sell for decades. Real estate feels like the safest asset. The phrase, "they're not making more land," creates false security. Poor families believe property is the ultimate investment. But property markets freeze during collapse. Can't sell when no buyers exist. The market doesn't crash dramatically. It simply stops. No transactions. No offers, no liquidity. Property taxes become unaffordable when governments become desperate for revenue. Mortgages must be paid regardless of market conditions. Property becomes liability instead of asset. Historical examples are devastating. In Japan 1990s, property prices fell for 3 decades. In U.S. 2008, millions were underwater on mortgage. In Argentina 2001, real estate became unmarketable. In Greece 2015, property was unsellable while rising taxes accumulated. In Venezuela, real estate became valueless. The mechanism is inescapable. Market illiquidity during collapse prevents sales. No buyers means no sale possible. Taxes continue regardless of value. Mortgages continue regardless of market. Maintenance costs remain. Property worth becomes fraction of purchase price. In Japan, owners were trapped in underwater mortgage for decades. Couldn't sell, couldn't walk away, lost property or stayed trapped. Real estate feels solid, but liquidity disappears during collapse. Asset 7 seems protected by insurance. You own rental property for steady income? But when collapse comes, tenants stop paying, you can't evict, and property becomes expense instead of income. Rental income feels reliable. Monthly cash flow seems steady. Poor families believe rental properties are passive income machines, but collapse destroys tenant income instantly. Tenants can't pay rent when they lose jobs. Eviction becomes impossible or illegal when governments protect renters. Property becomes liability. No income materializes, but expenses continue. The mechanism is simple. Tenants lose jobs when businesses fail. Can't pay rent when unemployed? Government legally protects them from eviction. Owner must maintain property regardless. Property produces losses, not income. Historical examples confirm the pattern. In Argentina 2001, rent moratoriums prevented evictions. In Venezuela, rent controls were enacted. In U.S. 2008, widespread non-payment occurred. In Greece, eviction freezes were imposed. Rental income depends on functioning economy. When economy collapses, income evaporates. Tenants can't pay. Government prevents collection. Property expenses drain resources. Rental income depends on functioning economy. Asset 8 feels safer because it represents consumer staples. You stockpile food and goods thinking they'll protect you. But during hyperinflation, you trade them for survival while wealthy people already converted to hard assets. Stockpiled food feels like safety. Consumer goods feel like store of value. Poor families believe stockpiles are insurance against crisis. But hyperinflation forces rapid spending. Goods are consumed to survive immediate needs. No long-term value storage materializes. Perishable items expire. Goods depreciate and break down. Stockpiles become temporary bridges, not permanent protection. Historical examples reveal the pattern. In Zimbabwe, people traded possessions for food. Stockpiles became currency for immediate survival. In Venezuela, families forced to liquidate goods for basic needs. In Lebanon, stockpiles consumed for survival during crisis. The mechanism is inescapable. Goods are consumed, not stored long-term. Perishables expire regardless of need. Depreciation is rapid when unused. Stockpiles become emergency resources used quickly. Eventually gone. People with goods traded them for immediate survival. Goods became bridge to next day. Temporary, not permanent protection. Consumer goods are temporary. Asset 9 seems safer because it represents active production. You own a small business. You have customers, revenue, inventory. But when collapse comes, customers disappear, currency becomes worthless, and inventory becomes unsellable. Small business feels like security. Revenue stream seems reliable. Poor families believe businesses are income machines. But collapse destroys everything simultaneously. Customers disappear during collapse. Currency worthlessness destroys pricing. Inventory becomes unsellable when no one has money. Business becomes liability. Debt on business must be serviced regardless of revenue. The mechanism is straightforward. Customers lose jobs when businesses fail. Can't afford products when unemployed? Currency devaluation makes pricing impossible. You can't price products when currency changes daily. Inventory sits unsold while costs accumulate. Business expenses continue regardless. Debt must be serviced when revenue disappears. Historical examples confirm collapse patterns. In Argentina 2001, businesses closed en masse. In Venezuela, commerce collapsed. In US 2008, small business failures multiplied. Depends on customer income. When customer income disappears, business income disappears. Currency devaluation breaks pricing mechanisms. Inventory becomes worthless. Customers can't afford goods. Business debt remains. Small businesses depend on functioning economy. Asset 10 seems safer because it's backed by employment. You have stable employment. Good job, regular paycheck. But when collapse comes, employment disappears. Paycheck becomes worthless currency and years of income history don't matter. Employment feels like ultimate security. Stable paycheck is foundation of planning. Poor families believe employment is permanent. But jobs disappear during collapse. Currency devaluation destroys paycheck value instantly. Skills become marketable only in crisis when barter replaces currency. Years of income history disappear. Employment becomes insecurity. Historical examples are relentless. In Argentina 2001, unemployment exceeded 50%. In Venezuela, jobs disappeared en masse. In US 2008, unemployment soared. In Greece, youth unemployment reached 60%. The mechanism is inescapable. Employment depends on functioning business. Businesses fail during collapse. Paycheck is in failing currency. When currency collapses, paycheck becomes worthless. Employment history means nothing. Education and credentials don't transfer. The pattern follows waves. First wave, layoffs begin. Second wave, companies fail. Third wave, unemployment becomes norm. Fourth wave, paycheck becomes worthless paper. Employment is illusion of security. Asset 11 seems safer because it's government-backed insurance, unemployment. Insurance will catch you if you lose your job. But during collapse, government can't pay benefits, and if it does, payments are in worthless currency. Unemployment insurance feels protective. Government backing creates false security. Poor families believe government will support them during job loss. But government becomes insolvent during collapse. Can't pay all benefits when revenues disappear. Benefits denominated in failing currency become worthless. Benefits become insufficient when prices spike. System designed for normal unemployment, not systemic collapse. Historical examples expose the pattern. In Argentina, government couldn't pay unemployment benefits. In Venezuela, benefits disappeared entirely. In Greece, welfare system became overwhelmed. The mechanism is mathematical. Government becomes insolvent. Can't pay all claimants simultaneously. Benefits are inadequate even when paid. Currency devaluation destroys value while nominal payments stay frozen. System collapses under demand when unemployment spikes. The pattern unfolds predictably. Benefits delayed, then reduced. Currency devaluation makes payments worthless. System can't sustain payments during mass unemployment. Claimants have no backup. They depended entirely on government support. Government fails. Support disappears. Government assistance depends on government solvency. Asset 12 seems safest because it's based on real assets. You own your home. Equity is your safety net. But when property markets freeze, equity means nothing. You can't access it, can't sell, and property taxes consume it. Home equity feels like a real asset. Equity seems accessible in emergency. Poor families believe home equity is backup security, but market freezes prevent sales. Equity becomes inaccessible when no buyers exist. Property taxes consume equity when governments become desperate. Equity means nothing if you can't sell. False security based on illusion of liquidity. Historical examples are devastating. In Japan, equity disappeared for decades. Property owners held worthless assets for 30 years. In US 2008, negative equity became widespread. In Argentina, property became unsellable. In Greece, equity was erased by tax liens. The mechanism is inescapable. Equity only exists if market functions. Market freezes eliminate liquidity completely. Can't convert equity to cash. Property taxes become liens. Equity consumed by taxes, the pattern unfolds inevitably. Property value appears stable. Market freezes and stops. No buyers, no price. Equity vanishes as theoretical concept. Owner remains trapped. Property taxes continue. Owner drowns in taxes on worthless asset. These 12 assets all share one fatal flaw. They all depend on system functioning. Every single asset feels safe because every single asset depends on the system still functioning. When the system breaks, every asset breaks simultaneously. All 12 share fatal structural dependence. All denominated in failing currency. All depend on functioning institutions. All depend on functioning markets. All depend on government solvency. All become worthless together. No diversification exists across assets. No protection materializes when system fails. The trap is structural. Poor families concentrate resources in these 12 assets. These are encouraged by the system. These are sold as safe. These are most vulnerable. System recommends its own assets. No incentive exists to warn of failure. Why do all 12 fail simultaneously? All depend on same system. System failure affects all equally. No independent value exists. All interconnected through currency. Currency collapse affects all instantly. The poor are most vulnerable. Have no hard assets outside system. Can't afford alternatives. Depend entirely on system. Have no escape options. No international diversification. No alternative income sources. Wealthy have diversified holdings, hard assets, foreign accounts. Poor have only these 12. When 12 fail, poor have nothing. When system breaks, all 12 collapse at once. Savings freeze. Pensions get cut. Insurance becomes worthless. Employment disappears. Currency dies. Real estate becomes unsellable. Rental income stops. Businesses fail. Government assistance evaporates. All simultaneously. All completely. So what actually survives when the dollar collapses? What protects you when all 12 fail? While these 12 assets collapse, other assets survive. They're not fancy. They're not what you were told to buy, but they actually work when everything else fails. Land that produces food survives. Tools and skills survive. Preserved food survives. Animals survive. Community networks survive. Hard assets survive. Self-sufficiency survives. The contrast is stark. System assets fail completely. Outside system assets survive intact. What feels safe fails. What feels insufficient survives. What you're encouraged to buy fails. What you're ignored survives. The choice is yours. Continue in 12 failing assets, or shift to surviving assets. Build outside system. Create real security. Move now or lose everything. Poor families believe these 12 assets are safe. But safety is illusion. Real security comes from assets functioning independent of system. Land, skills, food, tools, animals, community. These don't feel like investments, but they're only investments surviving collapse. Will you move resources to what actually survives? Or stay in 12 assets everyone believes safe but will collapse with dollar?